Okay, good afternoon, everybody, and thanks for coming to the kind of after lunch session. So this panel, as you would have heard, is Know Your ABC around compliance. And I think navigating the complex compliance landscape is a huge challenge for everyone in the crypto space, not only in South Africa, but globally as well. So giving some content to the acronym ABC or KBT, the panel will explore the key components of compliance with a focus on know your business, know your client, and know your transaction. And it gives me great pleasure to introduce the two panelists. Immediately to my right is Madri du Plessis from Luno. She's the head of anti-financial crime, and I'll allow each of them to say a few words about themselves because I think they can do it better than I can. And to her right, we have Leopoldt Jansen van Vuuren, who's the compliance manager at Provenance. I'm quite keen for you to hear the panelists and what they can teach us. But I also think it's quite important to allow some time for questions at the end. So please, Madri and Leopoldt, just be mindful of the time constraints. Okay, so Madri, if you just want to say a few words about yourself.
I'm the head of anti-financial crime at Luno. I've been there for 3 years now. I manage a team of about 40 people in the AML ops, anti-fraud, market surveillance and analytics space. I came to crypto via the law. I practiced as a lawyer for a while, went to consulting, decided I never want to go back there, and learned how to do very many things in consulting, including doing some reviews, doing forensic investigations, doing AML reviews, setting up whistleblowing services, and also creating very many slide decks.
I haven't created as much slide decks as Madri, but Leopoldt Jansen van Vuuren, one of the compliance managers at Provenance. We are your one-stop digital asset compliance shop, offshore, onshore, jurisdictionally agnostic. Also by trade I was a lawyer, came to the AML space about 7 years ago, and I told Madri earlier that I'm in the crypto compliance space now for about 2 and a bit years. That's in dog years, so that's actually 14 and a half years because the crypto industry grows immensely quick. So thanks, Prof.
Thank you. Okay, so I thought how I would structure this panel is to look first at KYC, because I think that everyone is familiar with. KYC is an inescapable inevitability in our lives. Then move to know your business and then know your transaction. So if you don't mind, because the panel is relatively small, I'll also have 1 or 2 words to say, just by way of introduction every now and again. Okay, so when we speak of crypto regulation, we do know that crypto asset service providers are now accountable institutions. They've been added to the list, and as accountable institutions, together with the likes of banks, financial services providers, money remitters, crypto asset service providers now have to comply with FICA, or the Financial Intelligence Center Act, in its entirety. This means, of course, not only know your client, but you have to have a risk management compliance program. There are reports that have to be made. It's a very onerous piece of legislation to have to comply with. My question to you, Madri, or either or both, is we hear in the market that we accept that we have to be regulated. This is true of countries all over the world. But is it true that crypto asset service providers are more heavily regulated? Are there more onerous obligations imposed on CASPs than, for example, on other financial services providers, on insurance brokers? Can you maybe dispel or give some content to that question?
So both yes and no. In the case of the travel rule, it's definitely the case that there's more requirements for CASPs to collect and screen and share information with counterparties than they are on banks to do the same in terms of SWIFT transactions. But I mean, we also need to remember that if you go from not being regulated to being regulated, then everything will feel more onerous than it should be. It is also the case that there is regulation in place that is just not settled yet, and I think that makes it quite difficult. And to some extent, because there's uncertainty, for instance, around exchange controls, there's been discussions around that for a long time, but it hasn't been settled. The FIC has issued some great regulations, but even in that, there are parts that are still open for interpretation. And what is happening is that because there's still that uncertainty left, it puts us in a position to try and be maybe more compliant than we would otherwise have been if we all would have to be if we actually knew exactly what the outcome would be of those regulations.
I think if I can add to that as well, like for CASP now being regulated, I think it feels more onerous because it's a new thing. Everyone is like, listen, we need to do this. But also being the new kid on the block and being the bad new kid on the block, if I can say it like that, a lot of scrutiny is placed on CASP to see what are you doing in order to prevent any illegal activity, any of the illegal illicit actors entering into this space. So even though it's not onerous and the legislation doesn't add more, okay, there's KYT that you need to do, you need to look at your transaction, but there's not per se a lot more on those than it would feel like in order to keep the industry clean. So also to the yes and no.
Sorry, just for those who may not know, and I'm sure everyone does, can you explain what is meant by this? What is this travel rule? And is the communication issued by the FIC, I think it's communication or PCC 16, I'm not sure. Is that a final PCC or is it still a draft PCC? So 2 questions, please. What is the travel rule? What obligations does that impose on CASPs? And secondly, is this directive or guidance or PCC binding? Some of them are and some of them aren't.
Yeah. So there's a Directive 9 was issued for public comment, and Luno and a number of different CASPs responded to that. There's still parts of that is not final. I don't know actually if it has been issued in its final stage, although we do know that by the beginning of March next year, we all will have to be compliant with the travel rule. And what it does is it requires CASPs to collect information on both the sender of crypto and the receiver of the crypto. Obviously, the sender in our case would be our own customers, so we already have information. But it also requires us to collect information around the CASP that we are sending to, the name of the beneficiary, some details, some KYC details of the beneficiary, and to share that information with our counterparty. It also requires us to do due diligence on our counterparty CASPs, and of course, as opposed to in the world of SWIFT, where there is one global system that all financial institutions, all banks use to do their transactions. In crypto, that is not the case. There is a number of different service providers that allows us to share information. Notabene is one of them. But what makes it also difficult is that there is not one single system that CASPs around the world is using. Yeah.
In fact, I just want to add to that now, Notabene being a great player in the game, with the travel rule kind of being newly introduced to a certain extent, it's going to be a new tool that's going to be created. And we know on the blockchain there are so many tools that are out there in order to prevent money laundering, KYT solutions, etc. It might be a difficult thing to move into when you have so many tools out there as well, not a singular source of truth, meaning one system in the end of the day. So it is going to be an interesting period of time.
Thank you. So maybe I can ask you practically, given the positions that both of you occupy, how do you implement effective processes to protect against fraud and money laundering? What do you actually do in your KYC processes?
I think the first thing, and this is almost like your company Bible, if I can say it like that, is your RMCP. So if your RMCP, it should always be drafted according to your business model, according to your business plan, and also your risk appetite at the end of the day. So drafting that piece of core founding document of your company, that should be a live document, changing as your company is changing and your process, etc. That's a core thing in order to get effective controls in place. That's the first thing. The second thing is having your standard operating procedures. So having a uniform document that everyone in the company uses in order to get to the same results at the end of the day. Third thing, when inspections are coming up, and they will be in about the next couple of months, is the regulator will ask you, where's your RMCP, how's it implemented, whether you take it all off of your shelf and blow off the dust, that's going to be an issue, or when it's like an old book that the pages are almost torn because you're working with it day to day. That's going to be a very big thing they are going to look at. And whether that is, whether you took RMCP off from the website, from the internet, just slapsticked it into your company, or whether it's actually speaking towards all of the things and services that you provide. So that's effective, and then we'll get to the KYC, but having your implementation rules in there as well is important.
Yeah, and if I can add to that, I mean, yeah, just to have a proper risk-based approach in place is such an important thing, because if you know the risk that they exist in your business, you can do the work to put in place a customer risk scoring that is actually appropriate to the kind of customers you have, which will help you to put in place monitoring rules for behavior and for transactions that is actually appropriate to the kind of products that you offer. And so what we are seeing is that you are able to do that and are really able to identify the customers that are high risk and that, you know, gets up to no good, and customers that is the majority of customers that are good customers that just wants to get on and do their crypto transactions. You can actually put in place the kind of controls and the kind of friction that focuses on the customers that pose a higher risk, and remove a lot of friction out of the journey of those customers that are good customers, and so actually ease that transactional journey. And in that way we can actually support our customer success teams as well.
Thank you. Again, if I may, from the moderator, I hope I'm not abusing my position here, I just want to make one point which I think is very important. If one has regard to the definition of a crypto asset service provider in FICA, it's very different to the definition of a CASP in phase. It's much broader than the definition of a crypto asset in phase. So you might not fall to be regulated as a crypto asset service provider under phase, but you could well, nonetheless, be regulated in terms of FICA. It encompasses not just the crypto asset, but money transfers, value transfers. I just want to make that point. Two statutes where the definitions don't tally.
Yeah, I mean, for us, the important thing is to deal with the fact that it creates, you know, the different pieces of legislation also creates different compliance obligations. And so, you know, dealing with treating customer fairly and dealing with, you know, just having a better idea of the kind of products that you provide and how that fits into the financial space, you know, as opposed to the FIC where we are talking about more money laundering related things. It's also not always the same team in your business that is going to deal with those two different things. And so I think it's, in terms of the different pieces of legislation that is governing crypto, it's important to make sure that you get the right people together to speak to the different parts of that regulation.
Yeah.
And if, just for CASP out there as well, if you are applying for your license as a crypto asset service provider, we always ask our clients the first thing when we assist them, have you registered with the FIC as well? Do you, because it's two different legislations, it's two different requirements, so in the end, make sure that you are actually registered where you need to be and have your relevant, like MLRO in place, your relevant compliance officers, etc.
So that, seeing as we've forayed into the realm of phase, maybe that leads us into the know your business side of the ABC. I know that's not the acronym, but do you want to tell us what you understand, or tell the audience what you understand by KYC, KYB, and KYT? What do those acronyms mean in the compliance space?
I think initially it's always coming back to the core root is know your business or know your customer. In the end, know who you are dealing with. We all hate KYC, or hate going to the bank and giving a proof of ID, a proof of address, and et cetera, et cetera. But in the end, those measures are also put in play in order to protect the ecosystem, especially when you speak about the crypto space. There's such a bad stigma behind the crypto space, and working together, we can actually clean the system up and actually bring to play that this is not the boogeyman under the bed. If you just lift up the curtain or lift up your bed, you'll see it's actually an opportunity. So in the end, it's lifting the veil and knowing who you are dealing with. When you have KYC, your ID, your proof of address, all of that, know your business, literally who are the owners, who's in control of the business. And then KYT, know your transaction. We all know that every transaction is actually recorded on the blockchain. So there are so many amazing tools out there that can assist your compliance team in order to comply with the regulations and then protect your company in the end. So that's just, and I want to actually put this into 4 different aspects. Whether you are a CASP, whether you are a financial asset service provider, we are all obligated to, when it comes to sanctions. You are not allowed to operate or interact with any sanctioned individual, company, or subject. That could be a wallet in the end as well. So why do we need to comply? Why KYC? Why KYB? Why KYT? Sanctions. You might interact with any sanctioned individual or subject. That could leave you with a lot of headaches. Second thing is regulatory requirements. So in the end, regulation requires of CASPs and FSPs to do KYC, KYT, do anti-money laundering. So according to regulation, you should comply with that. If you're regulated, if you're not regulated, then there's a reputational aspect to this as well. When you have a project running, a decentralized autonomous organization, a Web3 project, any blockchain-orientated protocol, who do you allow into your ecosystem? Are there any wallets that are subject to sanctions? Are there any individuals or companies that are subject to sanctions and they're coming into your ecosystem? If you have a project running and all of a sudden you're on the right road, the right track, and it gets out there, Vladimir Putin is part of your protocol, I can rest assured you will not have such a good reputation at the end of the day. That's the third thing. And the fourth thing we always tell a lot of our clients, especially in decentralized spaces, whether you're regulated or not, are you right-sizing for the future? Are you actually self-regulating in order to protect your company, protect your systems? So you might not be regulated now, but what if you are regulated in the next 2 to 3 years? Then you need to go back and then you remediate. Remediate is a headache, it's expensive, it's not lacquer for anyone. So that's also why these things are important in our review.
Yep.
Sorry, the third, this know your transaction. Does that really help in tracking and monitoring of suspicious transactions in terms of the reports that you have to make under Section 29?
Yes. Absolutely. I mean, it's for us to be able to, so it sort of comes back a little bit to the risk-based approach, because it's, if you take a transaction monitoring product off of the shelf, then you're not going to be able to do that properly. So whatever tool you use, whether it is Chainalysis or Elliptic or TRM, you still need to do the work to make sure that you are actually putting the rules in place so that you can have the right nuance when you do that transaction monitoring. And this brings us back to the KYB and the KYC as well. You have to know the risk that sits in your business. You have to know your customers to be able to distinguish between the kind of monitoring you need to do of the transactions of your higher risk customers and your transactions of your low risk customers. And so it is extremely important and it is very helpful, but you have to do it in the right way and you have to understand your risk properly, because otherwise you are going to bring friction into the life of your good customers, which is really not what you want to do.
I actually want to add to that as well. Good point, Madri. There are amazing tools out there. Chainalysis, TRM, Elliptic. I'm not promoting any of those specifically, but there are great tools. You can have a lot of these great tools in the end of the day, but we still believe that there's a human element required behind all of this. You can have all of your triggered rules. Let's say you have a know your transaction rule, and you set the rules to indirect exposure to scams should be alerted. Great, if you can have your APIs, you can have all of your risk notifications come in, but you still need a human being to interpret the data that's been given to you in order to make a clear, informed decision according to your risk-based approach. Taking the example of scams. So if you have receiving or sending exposure to scams, that's a big difference. Having receiving exposure, so let's say you have your wallet, you received funds from a stolen or scammed wallet, it means you could be part of the bad acting. If you actually send funds to a scammed wallet or to a stolen funds wallet, you could be the victim of the scam. So in the end, that human element behind it, in order to make that clear and informed decision, is just as important as having the tool. And as a second thing I want to add as well is, we help a lot of our clients. They might have the tool, so they go to one of these big service providers, have the correct tool in order to monitor all the transactions, but do you understand how to put into play the right risk ratings, the correct parameters, and also alert settings? Is your company, let's say, in the Cayman Islands where gambling is prohibited, then you put that as a high risk. South Africa, we don't mind gambling, that's a medium risk. Do you have sending, receiving exposure, direct, indirect? So we also come into play and assist clients to actually understand what their risks are and implement that. So it's also just as important.
Thank you. The directives issued in terms of the FICA allow for outsourcing in certain outsourcing of certain compliance functions. Has that taken off in the crypto asset industry? Do you outsource certain of your functions in compliance or in compliance with these directives, or is most of it done in-house by yourselves?
From a Luno perspective, although obviously Leopoldt will have a lot to say about that, but from a Luno perspective, we do all of our compliance in-house. Obviously, we have a lot of tools that we use. We have really good tools, and we use that, and we fine-tune that in a way that works for us and in the risk that we have to deal with. But the issue with outsourcing for us is that then you are still, in the end, as the accountable institution, you are still the institution that needs to be responsible for that. So now you, in our mind, you basically double your responsibility, because you need to make sure that your service provider is doing the work that they are supposed to be doing, and you also have to make sure that the customers that you have is not putting you in a position where you are actually now having unacceptable risk customers. So for us, it's actually easier to do it in-house, but I'm sure that Leopoldt will have a lot to say otherwise.
Well, if it was, if our company had to make the decision, we would like all CASPs to outsource the KYC so that we can have more work.
See, I'm letting them advertise themselves.
Yeah, love it. So it's actually such an interesting question, Prof. So certain jurisdictions that we operate in, the legislation is written in such a way that your MLRO, your AMLCO, your money laundering reporting officer, your compliance officers, they should actually be outsourced, meaning you have a segregation of power where you don't have the same function that completes the tasks and then also signs off on it. So business will come and business will say, listen guy, you need to push this through. I don't care if it's a high-risk client, I don't care if it's Russian money, you're putting this through because it's paying your salary. Now you have to tell that person, listen, I'm not going to do it, might lose your job. Where other jurisdictions where we operate says, you need to have an external party that your compliance officers and your compliance team can go towards and say, I don't feel comfortable about this. And the external or objective party can actually make that decision. So that's when it comes to, like, in order to get some business in. So that's where companies like us come in to say, let us take care of all that for a small premium while you focus on your business and grow your business at the end of the day. So
it's the small premium.
It's the small premium.
Just two questions, I think, from me. I think they're interlinked. So I'm quite cynic in some respects, and the starting point for regulation is that regulation must be effective and it must be efficient. It must be put to where it's most needed. Now, we see all kinds of obligations that are imposed on CASPs and other accountable institutions. Is this travel rule, given the nature and the jurisdictionless nature of blockchain and CASP transactions, is that effective? Are the measures that we put in place really going to have the effect of, we will never combat, but of lessening the likelihood of money laundering? Are the measures effective, in your opinion, or will they prove to be effective given their novelty?
If I can, do you want to start off? I can start off. Like, I think it's already a better starting point than doing nothing. So in the end, regulation is put out there also to protect the customer, to protect the industry, to clean out the industry in a large extent. And if you have people running around doing whatever they want to do, you will have a lot of havoc as well. But if there is a little bit of guidance, that will also promote the industry. And what we've seen in South Africa specifically, when the regulation came into play and they said, okay, CASPs, you need to register as well, we saw so many offshore, not offshore, but outside jurisdictionally companies coming to South Africa to get certainty. We believe that where there's regulation, there's more certainty. Certainty brings a lot of investment. Investment brings growth, but it shouldn't be a killing regulation where you actually kill innovation, where you kill all of that as well. So there should be a sweet spot. And I think with the grey listing of South Africa, we are doing as much as we can as a country as well to get out of this, to bring more growth as well. So I think, is it effective? We are working towards that, and I think it's a measure put into play that is trying to combat that and also apply with FATF regulations, etc. So it is a recommendation by FATF. So in the end, as a joining country, we need to apply that.
But it is also the case that if you simply apply the regulation as a tick box exercise, then it is absolutely not going to be effective. So you can't, I mean, even the travel rule, you know, the travel rule by itself is not the thing that actually brings more protection into the system. It is that, along with understanding your risk and applying your KYC, your KYT, and your KYB. I mean, to Leopold's point of, you don't want regulation that is actually, you know, killing innovation, killing the market sometimes. I mean, we are seeing now in the UK, just at the beginning of the week, there's new regulation that has taken effect to protect customers against authorized push payment fraud or app fraud. And it is so onerous that a customer with not a lot of evidence can claim that they have been defrauded, as a result of which both the sending payment service provider and the receiving payment service provider both now have a 50-50 accountability to repay to the customer the whole of the amount that was defrauded. And so that obviously puts, that it causes a real financial risk to financial institutions. And if that kind of a regulation come in, if you don't have really nuanced controls and nuanced mitigations that you can apply, you will kill your market. And so it's quite interesting to see, not just in the world of money laundering, but also in fraud, being able to do that really well is quite important.
Thank you. Sorry, I don't know if we have any time for questions.
2. 1.5.
Any questions? Sir? I can bring it to you.
3 quick questions.
3.
Okay, first one. The financial legislation usually comes from the USA, Prof. Therefore, it promotes the political agenda of the USA. South Africa is a BRICS country, and if we want to increase our trade with Russia, it creates a political problem. That's the first one. Second one, the travel rule. Well, can that eventually make gold a better option than crypto?
I mean, on the first question, I agree that can create a conflict, and there's very many philosophical and less philosophical conversations about which sanctions regimes we should be complying with or we should be subscribing to. And in the end, it is for each business to decide where they want to actually, where they want to go with their business. I mean, South Africa obviously subscribes to the UN sanctions list, and as we know, the Security Council is a very political animal. I mean, we have to comply with what the regulation says, but a decision around what we want to comply with in addition to that really comes down to where the business wants to go to in the future.
And according to your own risk appetite. So if you want to comply, like globally, a lot of the tools also implement not just one, but all of the sanctions list. So it's also depending on your own company. And didn't really understand the second question to gold and... So.
Travel rule makes gold more attractive.
Well, gold is often more attractive than almost anything at the moment. But, I mean, we should almost, if anything happens to the market, the gold price goes sky high. But, gold has been around for a very, very long time. And so there is a reason why people find comfort in it. Crypto has not been around for such a long time. So I think it's early days still. I am certainly very positive about crypto. The closest thing possibly to something like crypto is strangely the Vuuren that Interflora used to use. If there's anybody here that knows what Interflora was, I can tell you about that. But yes, we shall see, but it's early days, so don't count crypto out.
I quickly want to touch on that, like 1 minute, 30 seconds. So in the end, we always believe, quickly, education is key. Whenever it comes to anything, education and places like this where we can interact and have a good conversation, that's excellent. Explain to my dad's a farmer, I come from a farming community, can hardly speak English. So explaining to my dad that's on a farm what crypto is, and he's like, son, so now you're working with the devil's currency. I'm like, let's have a chat, let's have a conversation. So I took it to him with layman terms. I'm like, okay, Dad, so we had the exotic wild boom about 3 years ago. I don't know if anyone's familiar with that, but you had a black impala go for $1 million rands. You had like a buffalo go for 35 mil. That's not what it's been created for. Like back now, 2 or 3 years later, biltong hunting, you buy a black impala for 5,000 rand now. So that whole thing crashed based on the fact that it was a get-rich scheme, a lot of that. So if you're in this for a get-rich quick scheme, might not be advisable to go into that, but having education to say it's been created for a transfer of value that's quick, that's reliable, that's interchangeable to any jurisdiction. So having educational sessions like this can actually also, according to what I believe, bring it to a point where, like gold, everyone understands gold. We see it, we touch it, we know about it. Now we don't see it, we don't touch it, but we understand it. So I think education will also debunk the whole thing about travel rule making gold more attractive than crypto, if you understand it. Thanks.
Thank you. Thank you, Madri and Leopoldt. I could ask you questions all afternoon. So
Thanks,
a
guys.
big hand, please, to our panelists.
Thank you.